All right, good afternoon, everybody. This is Event Trader here. We are about to kick off the options playbook with Brandon Mars, of course. Quick word on the market: we are testing near session highs as we edge above that 4,200. Still kind of the opinion that 4,200 will act as a resistance here. We called 4175 on the bottom and 4200 at the top. So be interesting to see how far they could push us up here. And we'll keep an eye out on the market activity as well as any headlines that could be impacting us here. Of course, we got the Fed meeting tomorrow, so I just don't think people are going to want to get overly aggressive. What I think more than anything is perhaps it's some shorts looking to exit the market, and I'd be curious to get a thought on these markets here from the one and only options trader, Brandon Mars. So, Brandon, how are you doing today, my friend?
I'm doing pretty well. How are you, Gavin?
I can't complain. Just banging away at things here. Earnings, Fed, all that stuff always makes for a fun week, right? So usually a lot of volatility. We've kind of cooled off, I feel, over the last few days to a certain extent, I guess. But definitely still getting those 2% moves here on the occasion, like we did yesterday. So just watching that, I'd be curious as to your take on the market here.
Yeah, so I think we're getting a little bit of the usual pre-Fed, I don't know, games chop, if you will. So, we're kind of stealthily here creeping up and kind of turning ourselves into an okay little day here. But yeah, like you said, I don't know how many people are going to want to back up the truck and really send this thing soaring prior to the Fed. Yeah, I'd agree with you. I'd say some shorts are probably saying, you know what, we've had a pretty good run. I think some of these uncertainties in the market are getting out of the way, little by little, and maybe don't want to push themselves after some nice gains into the Fed. So we'll see how high we climb this afternoon. I would imagine the closer and closer we get to the meeting, the more and more chop we might see. But we'll see because it's been a lot of things going on, so you never know these days.
Here's an interesting tweet coming from Bespoke. I'd be curious as to your thoughts. Speculator positioning went net long on S&P 500 futures for the first time in 70 weeks, according to the latest CFTC data, and in the longest streak of weekly net short readings in the history of the data. You follow positioning at all?
No, I haven't looked at that report, and that seems a little odd, doesn't it? 70 weeks? Did I hear that properly?
Well, I know that people have definitely, short positioning has been pretty aggressive. I would say that that's probably a net negative for the markets if that is the case. Just because you'd prefer to know that there's like a ton of shorts going on in there. I mean, if it's from the CFTC data, I'm assuming it's from last week, last Friday. So I hadn't seen anything on that, but definitely a number. I'll have to run that by Brett and see what he has to think about that. But that's kind of an interesting report. Just kind of popped into my eyesight when I was talking here. So we'll keep an eye out. I'll see if I could get some thoughts from Brett on that because I know he follows that data pretty closely. But so I mean, in general, one of the things Brandon and I was looking at is, there's been 7 times we've been down in August, September, and October, and the last 5 times we've rallied in November. So it seems like some people could be front running that. Do you have any kind of bias going into the end of the year? Or are you pretty much an open book, ready to just kind of read and react?
I mean, I want to keep myself kind of on the open book. Just, again, we've gotten some of those uncertainties out, like the House Speaker, Bank of Japan. Obviously, a pretty big overhang with what happens in the Middle East. But if I had to tilt in one direction, I mean, the seasonality of November and December is going to kick in. And, we've talked about a few of the things in the room from time to time. The put call ratio is getting a little high. The fear and greed index, people are getting scared. So, I minus that comment that you just made about the long positioning, I think things were getting kind of right for a potential squeeze with the seasonality. So that would probably be how I lean, but I don't know. You never know when all of a sudden yields are going to spike or whatever headline, or I hope more things don't happen in the Middle East, but that could be a very quick out of nowhere headline, unfortunately. So definitely want to stay on the toes.
All right, let's break in and talk a little bit about some of your trades that you have on, and some of the recent ones that you've taken, and a few radar plays that you have on your radar, of course. So, first, I guess we'll talk about the ones that are live right now, and I believe the only position you're in is CrowdStrike, CRWD, at the moment, correct?
That is correct.
So let us know what kind of led you into that name, and what are some of the levels you're watching here closely that'll uh, spur you into action.
Yeah, so when I was looking at this last night on the daily chart, it's obviously had a little bit of a pullback with the rest of the market, was starting to maybe look like a little bit of a pullback long candidate. It's an asset class that I like in the cybersecurity world. And the last 2 days were both inside days, and they both made higher highs and higher lows. And the inside bar started around the 176 level. And then what ended up catching my attention today was it attacked it once right at the beginning of the day, and then another time around 10:30, another time shortly after that, and just kind of looked like it was starting to coil. And we're also about to make another day. Again, a lot of trading to go, but possibly another day of another high or high and a higher low. So just looked like it was building. Recently bounced right off the 50 RSI on the daily chart, which is a setup I usually like to look at. And yeah, then just kind of the intraday activity caught my attention. And what I'm watching for now is it has now attacked the 176.5 level 3 times today, and it keeps making a higher low each time. So I am hoping that we can attack it here one more time this afternoon, and maybe make a run at the 20-day, which is up around 179.5. And that would be my potential area to exit.
All right, so there you go. You have the exit level laid out for you, and all the reasoning on CrowdStrike here. It's kind of taking a look at the bug ETF out of curiosity to 7, one of the stronger days in the market, up 1.6%. Nice little bounce off the lows. You got any thoughts on that bug chart there?
Let
BUG.
me take a look at that real quick. I haven't looked at that recently. Yeah, I mean, it looked like it made a little bit of a base here the last couple of days. Really steep downtrend. And it looks like it's starting to break that. The downtrend I'm talking about, call it from mid-October. And I like to look for those steep downtrends. I know that's been talked about on audio a few times, how those are maybe a little bit easier to break. So that's kind of a real steep drop for asset class with some tailwinds. And yeah, I mean, the candle today is shaping up to be pretty nice. Got some pretty decent volume so far and very little wick at the top. Again, a lot of time to go, but almost think that would be making a run up there to that 200-day around 23.39.
All right. So another level being laid out here by Brandon. Now there's a few trades that you recently took, did well, and you got out of. We'll just start with the broad Qs first. The QQQ, of course, popped into that early yesterday. You are out of that now. And speaking of the Qs, we are seeing that extend its gains here. The QQQ up to that 350.43 level. Just watching the Nasdaq futures also extending gains here up to 14,470 at the moment. So, what was it about the Qs that you liked that got you involved there?
Yeah, so the Q trade was, I think that was from Friday, if I remember correctly. And I mean, the action on Friday morning was was pretty wild. The first hour, I mean, that was just whipping back and forth. Looked like it was going to break out, break down, break out, break down. And, I think even Chart Trader had jumped in and said that it was extremely choppy. And it just finally looked like it was maybe going to break to the upside after some of the games. And I just wanted to take a little lotto on it in case it did. And got a real nice breakout. And then luckily I got out in time, because right after the breakout, we got another breakdown. So just kind of saw some building in the chart and was hoping after the games we were going to get a little bit of a nice move higher. And unfortunately, that was one I wanted to let ride, because usually when you get an hour worth of chop like that, you get a pretty outsized move once you finally break out of that chop. But things were just actually so choppy, it made me a little bit nervous. And I think it was up like 70% or so. And I just didn't want to push my luck. And luckily, I made the right decision there.
All right. Another recent play, and one that you certainly are pretty familiar with. You play often. That's Meta Platforms. You've definitely done a good job at managing that through the months here, and you jumped in on a call there. Had a nice push up through the 50-day moving average. It's reversed down a little bit lower today. You are now out of that position. But what was it that you liked about it, and what do you kind of see playing forward here with Meta Platforms?
Yeah, so the Meta was a put that I took overnight. So entered into it yesterday. I kind of took it as a lotto with the Bank of Japan, which really turned into a non-event for the most part. And what caught my attention was yesterday was a pretty solid bounce for most of the tech names. And if you were looking at Meta on the daily chart, it had a pretty long upper wick showing some sellers stepping in, almost like a shooting star candle almost. And if I was looking at all the other big tech names, and most of them had some pretty clean bullish candles, but Meta did not. And it didn't reclaim. Well, it did reclaim, but then fell back under the 50-day. So I was just kind of looking at all of the big tech and said to myself, well, if the Bank of Japan does smoke the market, which one of these big tech names might be the most vulnerable to some selling? So got a nice move down this morning, and I will be honest with you, I thought that because the Bank of Japan was a non-event, I thought we were going to see a quicker bounce. Meta was approaching that key 300 level, and it was up 30%. And I've talked about this before. Whenever I go into something overnight and it works in my favor, I'm usually a little quicker to take the profits, just because, one, I don't want to ruin the rest of my day. And, it's always nice to kind of start the day with a win, and it was approaching a key level, and I thought we were going to get a quicker bounce. So I got out of it, unfortunately, a little too early, as it ended up dipping down to like the 97 area. So at this point, it's definitely underperforming a little bit here. And, if it can't reclaim that 50-day, if we keep rallying today, I mean, I don't think the numbers were terrible for it for the quarter, but it's definitely remained under pressure now with the rest of the XLC between that and Google. So if it pushes a little higher, I might be interested in it as a call, but it's kind of looking like a potential put name going forward.
Okay, so we'll keep an eye out on that moving forward here from Brandon. Now, there's a few that you have on your radar here that we just want to chat a little bit about. Starting first with Microsoft, MSFT. What is it that you're seeing in Microsoft that's piqued your interest?
Yeah, I think that Microsoft's just kind of emerging as the winner here from earnings season. So, I think this earnings season in particular, I mean, I think every earnings seasons, but, some in particular will really separate those winners from the losers. And, Microsoft seems to be, one of the winners, and seems like a name that you'd kind of want to have on the radar for calls for any sort of market strength. So, again, it made that down day last week, looks like on the 26th, and it's just been making some, again, higher highs and higher lows, and it's actually now got three inside days. So this will be interesting. If it can break that mother bar from the 26th, so you call it the 340.5 area. I would think that this would continue its post earnings release move. So it's made a steady little climb off the lows today, and real nice kind of uptrend intraday. So, if we can continue to get some strength here, and this starts to test the 340 area maybe today, I think that will start building towards a potential breakout, again, barring the market falling apart for some reason.
Yeah, no, I like that call. This I thought was one of the best post earnings calls. Certainly a little expensive compared to some of its peers, but I felt that it was a pretty strong quarter. So I like that call. Another name on your radar, MasterCard, MA. What is it that you're looking at from MasterCard? Obviously, it had that breakdown below the 200-day moving average post earnings last week. I don't think that there was anything wrong with the earnings. It was just kind of those payment providers getting beat up. I thought Visa had a really strong report for that matter. So I guess I'll ask you about Visa as well. And perhaps the name that I like the best out of the group is AXP. So I know it's not a payment provider like or transaction provider like Visa and Mastercard. But first, tell us what you saw at Mastercard, and then maybe a little bit of color on what you think of Visa and AXP here too.
Yes. So, like you said, I mean, the credit card companies had some fairly solid reports. They all got beat up pretty good off of them too, and I think that's probably a little bit to do also with the financials have just been under heavy pressure, and Mastercard and Visa, and I think AXP. I can't remember if all of the credit card companies are in the XLF, but I know Mastercard and Visa are. So you're probably getting thrown out a little bit with, JP Morgan. You had the Jamie Dimon news bringing down the sector a little bit. And I just kind of felt like, it took that dip down, kind of had that, long lower wick on the 27th on the daily chart. And then yesterday finally made a nice move higher, and the financials as a sector finally showed some signs of life, and just felt like they've been beat up so much, and the credit card companies too, after good earnings, that they might have a potential for more of a 2-day run. So, I was kind of looking to see if this would maybe run back up and at least test that 200-day. And I mean, it just kind of moved. I missed it, unfortunately. I mean, I think it might have a little bit more upside, but I'm probably not about to chase it up, 1.25% today as we head into the afternoon. But as long as we'll see what the Fed does to the financials. But if they're strong, you would think it would make a move to that 200-day, which could create a nice little short-term trade. And I think I just saw in the room too on the unusual options activity, MasterCard's on there. So, you got some call volume coming in on it as well, which you always like to see. And
What about
then
Visa,
Visa. Yeah, so Visa
which
here.
is Visa's number 3 in the XLF for the top holding, Brandon? Just so you know, Mastercard is number 4.
Wow, they're that high these days, huh?
Yeah.
Wonder if that's probably a combination of the JP Morgans of the world taking a dive. Well, the credit card companies, for the most part, long term, have been pretty strong. So,
Well, JP Morgan's second, Berkshire's the top hold in that XLF, and then after Mastercard, you got Bank of America, Wells Fargo, S&P Global, Goldman, Marsh McLennan, and Progressive. So they are definitely heavily influenced by the XLF.
okay, perfect. Thank you for that. I appreciate that. Yeah, so Visa, I mean, geez, as I look at Visa here, so the reason that I tend to gravitate towards MasterCard, just on a side note, is I think I mentioned this a couple times on some calls. You tend to find some of your favorite traders, and Mastercard's one of them for me. I think it was last year. It was like number one or number two in my P&L, and I call it like a hidden gem for me. And it's not a hidden stock. I mean, it's a huge company. I mean, I think if everybody reached into their wallets, everybody probably has some sort of Mastercard or Visa sitting in there. But the reason I call it a hidden stock for me is it doesn't actually tend to trade that many options. So I have stocks like MasterCard, Costco that are big stocks, but they don't trade a lot of options, but I've enjoyed trading them. So that's kind of why I gravitate towards MasterCard. But looking at the Visa chart, I mean, that's reclaimed its 20-day now. It's above the 200-day. I mean, from just a chart perspective, you would think that Visa would actually start to be a little bit stronger here. And I would think it would kind of test the 100-day moving average, at least now up in the 237 area, and maybe even a run up to that 50-day if we get some strength. So yeah, no, I like the look of Visa as well.
And finally, American Express AXP.
American Express. This is one.
See, this is the one that I like. Again, I know they're not apples to apples, but this is one that I thought had a great quarter and just kind of got taken to task and looks really good here now at this point.
Yeah, I mean, long term, this is just one that's been in a pretty long downtrend. And I think you're right. I mean, I think this last, call it since like the 20th there, the low from the earnings, I think it's probably trying to create a little bit of a base here. I mean, it looks that way. You got some climbing RSI. Actually looks like you've got a MACD that's about to give a bullish cross. The MACD histogram is looking like it's going to turn positive. I mean, I would imagine at this point, after some good earnings and probably some shorts closing out some pretty strong returns, I would think you'd make at least a run up to that 20-day around the 147.5 area. I would think so. And then I think you'd probably look to start filling that post earnings release gap, call it the 149, 150 area.
All right, so a few names out there. One thing that you had mentioned before, Brandon, I just want to circle back to it because I think it's very smart. One of the things that I like about your trading is you definitely have that set group of names that you trade. I think you said it's about 30 names that you kind of track and just go around there on the options trading. And you also mentioned your review of your P&L from 2022, I believe you said when you were just talking about MasterCard. How often do you go back and review that P&L? Is that like a monthly exercise for you just to kind of see where you're heading and where you're not?
I review it at the end of every up month.
Fair enough. Fair
No.
enough. It's always easier to look at the winning months, right?
No, I actually look at losers more than they do winners. For me, I try to look at the numbers not too much. I mean, I'll be honest with you. Like in my TD Ameritrade account, I have my account value blocked out. There's just a simple button you can push, and it blocks out all of your numbers because I try to not look at them. I just try to trade smart. P&L though, what I'll end up doing is sometimes stocks will end up on my radar, or there'll be stocks that I trade. And sometimes at the end of the day, when I'm doing my reviews, I'll look back and I'll say, the way this stock trade drives me crazy. And I think we all have them. And then sometimes I'll go and look and I'll be like, I've lost a couple $1,000 or whatever on this stock, and it's driving me crazy. The options chain has dried up. Why am I trading this? And then I just get those off my list. And it's not because I've lost on them, but it's like, I'm just losing on something that's really annoying me when I could trade a stock like a MasterCard, which I really enjoy. and you start to get to know some of these stocks and their patterns. And I think it's just kind of trying to simplify things. But I definitely I look at my numbers more than I should, but not on an intraday basis when I'm actually trading. More at the nighttime, maybe over a glass of wine when I'm relaxing. I'll scroll through and see what I'm doing right and see what I'm doing wrong.
All right, now that's good advice. Um, Quick question before we go get into this week's topic, Brandon. Somebody's asking about your thoughts on some of the AI options tools that are being rolled out here, and if you're kind of noticing any influence in them in the options market when you're trading there.
I'll be honest, I have not looked at any of the AI tools. I will fully admit I can read charts, but I barely know how to turn on a computer. So me and me and AI aren't exactly we don't exactly get along with each other. So I have a friend who's very savvy at it that's been trying to send me some websites to take a look at, and I've been slowly trying to chip away, but I just haven't looked at them. I will take a look though, because I'm curious, and then maybe maybe we can either do a segment, or I can put together some notes on it, or maybe at least briefly touch upon it, over the next week or two. So I'll make a note and I'll take a look and see what I can find.
Okay, there you go. I mean, anybody that's interested in hearing that segment, definitely feel free to write in. But I think that would be a pretty interesting one for sure, Brandon. Um, so let's talk a little bit here about what this week's topic is going to be, and that is option straddles. So why don't you give us some of the basics to start off, and then we'll kind of run through a few samples and a few ideas on that front.
Yeah, so sorry, let me grab my notes here. I got up to get a pen here real quick so I could make a reminder for the AI. So sorry about that. Yeah, so option straddles. So we had briefly touched upon these in past call when I was talking about options and earnings, but thought a deeper dive was warranted, as they are a strategy that traders tend to implement during volatility and also earnings. So I think we got plenty of volatility and plenty of earnings still to come. So I figured this would maybe be a timely topic. So a straddle just involves buying a put and a call option for a security with the same strike price and the same expiration date. So traders would go into this strategy when they expect a large move in the stock price, but you're not exactly 100% sure on the direction. So again, this could be something like an earnings event, maybe like a product day from Apple, geopolitical uncertainty. So, kind of a lot of things that we have in our current stock market environment. Um, so this is a net debit strategy. So, last week we had talked about a net credit. So what this means is that the money is just leaving your account versus being deposited into your account. And this would technically be a neutral or directionally agnostic trade, because really at the end of the day, you don't care what direction the stock moves. You just need it to be a big move. So again, it's kind of one of those where you just put it in place. I mean, again, easier said than done, but you put it in place and you're really just hoping that the thing either just takes off or basically crumbles. But at the end of the day, you don't care which one actually happens.
Oh, sorry, I thought you were just going to keep going. So, um, obviously, Brandon, whenever you're talking about these, you're always looking at uh, a market that it fits pretty well into, and that obviously would be the case now. So I suppose Apple is one that could potentially be here. I hate to upset any of the Apple perma bulls out there. Or anything that this could potentially miss and go down, but at the same time too, Apple's got a long history of everybody expecting it to roll over and play dead and coming in and blowing it out. So let's just kind of take Apple as an example, since they got their earnings coming up. And I know things are a little bit rich. So how would you implement a straddle on Apple?
Yeah, so Apple on just because we are on that note in earnings, I'll touch upon one of the other points here that I sent over to you. So if you do something like these around earnings, which again is a time that a lot of traders will implement this strategy, you need to keep in mind that your premiums become very high. So in certain cases, you really need a big move for this strategy to work out. So looking here at Apple real quick, we're trading at, call it 170 and a half. I mean, yeah, I think the path to the least resistance, if people do these maybe at the money. So you look at the 170 strike price. Now, just real quick, you're looking at the 170
Which sits
call
right on
and
the 200-day moving average, basically, as well, right? So
yes,
adding to that straddle potential, I guess.
yes, absolutely. So the
Would
ones
that drive up premiums though on you, Brandon, too, if you're at like kind of a pretty at the 200-day moving average?
Well, in the case of Apple, I think the premiums would be driven up more just strictly on the earnings report.
Sure.
Um, I think if you get to a potential moving average, and I frankly haven't noticed this enough or studied it enough. I mean, if you get to a big potential moving average and Wall Street starts to price in, we're going to have a major make or break here, then I think your premiums would get driven up. I have never actually noticed it going up or down enough around a moving average to notice, though, to be honest with you. I think there was one time like a major level on Tesla after it had one of those huge runs. I noticed that. But generally speaking, I haven't noticed on a daily basis. So in this case of Apple, let's just take the 170. We'll call it the at the money strikes. So the call is just a little under $4. So I'm just going to use 4 to make math simple here. And on the put side, it's a little over 3 per contract on your premium. I'm just going to use 3 again for simple math purposes. So let's say you were to implement the straddle on Apple using the at the money strike of 170. It's going to cost you roughly $7 in premium to enter into this strategy for earnings. So basically, what would end up happening for you to profit for that is you profit from a long straddle when the price rises or falls by an amount more than the total cost of your premium paid. So if you're at the 170, add in $7 on each side because you've paid a total of $7. So basically you start to profit from this strategy essentially when Apple goes north of 177 or south of 163. Now, once you hit that level where you've gone your break even, in theory, the way that these work is you'd essentially have the opportunity for unlimited profits. Take that with a grain of salt because the stock can really move in one direction. And then ultimately what happens is the premium on the losing side is lost. And then, if Apple all of a sudden soared to 250, I'm no way saying it's going to, but you can keep profiting the higher and higher or the lower and lower that the stock goes. But again, in this case, you would need Apple to move north or south of those two numbers in order to make a profit. Now, the worst case scenario is Apple comes out flat and it just doesn't move. And then you end up losing on both sides of the table. And that is really the risk with these straddles. And I haven't done a straddle in a while, but I will tell you I've done them before. And when a stock just doesn't move, it stings. So you need to kind of prepare yourself mentally, because then all of a sudden you're like,
You're
okay,
losing
I
both
picked the
bets on that front, right?
yeah, you're losing. You are losing both bets. It's almost like betting on the coin toss for Thursday night football, and that's how you start your week. And I don't know, the coin all of a sudden ends up upright, and it's not heads or tails. So, not an actual scenario that can happen, but I think that paints the picture. So I've definitely sat back before and been like, well, this is just really obnoxious, because you have two options that don't end up working. So, this really isn't a strategy for any sort of consolidation period. If the market's slow, this is a thing that you implement when things are really going to move.
No, that's a good point there because I was, so is this something that you'd prefer to see a period of consolidation in before you go kind of like you get that spring coiled and you got a big event coming up here? Um, that sounds to me like that would be the best case scenario, right? You wouldn't want to do it if a stock's just starting to go into a consolidating period, I would think.
Yes, that's correct. Some sort of catalyst impetus that's going to make this thing move. The one thing I would caution, you are absolutely correct on the line of thinking of, it's gone through the consolidation and something's going to happen. Unless there's some sort of an event, though, sometimes stocks can just keep consolidating,
Right.
which again would then end up killing both of your uh, options. So, like you said, I think a perfect scenario, like you just said, was, all right, a stock enters into its consolidation period, gets the coiling pattern, and then Nvidia has its investor day where they're gonna, I don't know, implement some new AI chip, and this thing is going big one way or the other. That would probably be more of the ideal scenario, because again, I've talked about this with just regular puts and calls. Sometimes it can be really hard to time the potential breakout, and you sit there in your options and you think it's going to go, and it just trades flat. So that's something to be mindful of.
Yeah. Okay. So, and I guess then that's a thing. Probably the ideal situation would be looking for stocks and consolidating patterns that are probably a week or two out from earnings, right? Before the premium gets too high. Would that be something, or investor days, or PDUFA date, or something along those lines?
Yeah, no, I think that's smart. I mean, you've talked about kind of finding those earnings options a couple weeks in advance before the premiums get really high. I mean, some of that will already be priced in just because we know when the earnings are. But no, you're absolutely right. So I think a more savvy trader, can definitely implement the strategy that you just mentioned and have a little bit of a better foresight down the road of, all right, this is the stock that I really like, or event or earnings, and start to plan ahead. I tell you, that was never my strong point. So that was kind of one of the reasons why I stopped trading earnings. Was it was like, it'd be 3:59 before Apple reports, and I'm like, all right, which way am I going to play? And it just didn't have the best science to it. So that was kind of why I stopped. And I like your approach better.
I guess the offset for that would be you would have to pay for some time decay there. So what you're saving on the premiums, you're paying for time decay.
Yes, so you would get the time decay, but in the situation that you just mentioned. So let's just make a hypothetical scenario here. Let's just say there was a stock that was reporting in a couple of weeks. Nvidia, I think, is up in 2 or 3 weeks, if I'm not mistaken. And you were to look out at it now, you would get some of that time decay. But at the same time, what would also happen is, because you'd get closer to the earnings and the volatility would increase, that would actually start driving up your implied volatility, which would, in theory, drive up your premiums. So there would be some offset there, but you're absolutely right. The theta or time decay would start to kick in. And on that note, implementing this strategy, there are a lot of traders that would close out the position after the event. So this would be done in part because once that event passes, that implied volatility that I just mentioned that had been climbing up, driving up the premiums, would, generally speaking, it would drop or normalize back to normal implied volatility levels, which therefore drops the premiums. So this is referred to as a volatility crush. So this is one of the reasons why around earnings, you've got the premiums, they're super high, they increase right up until the event, and then once the event has come out and the news is out, you all of a sudden start to see these big drops in the premiums, and that's due to a volatility crush, and that is something that would apply in this particular case.
All right. What's some of the profit taking strategies on this then? Because obviously you're trying to manage two trades going on. That could get a little tricky.
Yeah, so what would end up happening in a lot of cases is, let's say you got your call and you're put out there, and Nvidia earnings come out in the 3 weeks and they just skyrocket. What's going to happen, because if you call it right and say Nvidia soars 10%, what's going to happen to your put side is it's going to become worthless really, really quick, because one, the direction of it's wrong. And then two, you're, call it at that point 10%, out of the money on your put. And then what's going to kick in is you're going to get that volatility crush. So basically that put is all of a sudden just going to become quite worthless. So then you have to kind of ask yourself, as a trader, you got to kind of look at the scenario of how much time do I have left on my options, depending on how far out you went on your expiration. And do I think that there's more upside? Do I think Nvidia is now dropped under, the 400 level, and they came out and they once again just crushed it? And I think everybody's going to be kicking themselves that got out, over this last month, and we're just going to run and run and run. Do I let this, option keep going? Or, do I just kind of take my money and run and close it out? And my strategy, if I were to hit a straddle correctly, you're going to have one option that's just going to be a loser. The other one would potentially create a nice return and then maybe even be in the money. If I thought that things were going to continue to run, I'd probably roll that option. That would just be my take on it. I would lock in some of those gains, get a little bit off the table. And then if I really thought that things were going to run more, I would move a little bit further out of the money, which, if you did get that continued run, would actually boost your returns as opposed to sitting on a in the money call.
All right. That's all the questions that I've got for you on this, Brandon. But anything else that you didn't touch upon that you wanted to add?
Yeah, just one last point. So, there is a reason that a lot of people look at pricing in the options market to, see where a stock might potentially move post earnings. And that's because, I don't know, how's the nice way to put this? Sometimes Wall Street's maybe very efficient at pricing in moves of events. You'll sometimes see those pre-earnings reports and say the options market is pricing in a 5% move in Apple, and sure enough, the next day it's up 4.9%. So where I'm going with that is in their efficiency in pricing out options and moves is, if they can price these things out properly and they can make more and more options expire worthless, the better that they do. So there is a risk in this strategy, in that sense that, it might seem like a very good idea to jump into something because you're going to get this huge move. But, Wall Street also has a tendency of pricing in these moves and balancing out their puts and their calls on their balance sheet to essentially make some of these options worthless. So, again, it's not a strategy without risk. You definitely need some big outsized moves. So I just kind of keep that one in mind if you were going to potentially implement this strategy.
All right. Anything else then, Brandon, on this front?
Yeah, I think we touched upon all the points. I think we're good.
All right, perfect. Well, just keeping an eye out on the markets here. We did get up to about 42.10. We are just seeing that faded just a little bit, coming down to that 42.03 area. So we'll continue to monitor this as we go in later on into the afternoon. But Brandon, as per usual, thank you so much for coming on and joining us here and teaching us a little bit about your trading style, about some of the things that you do that makes you such an efficient trader, and also just updating everybody on different strategies out there that people could play around with. If they're looking to get a little fancier, or if they're trying to figure out a way to take advantage of a move that they're expecting to see. So it's very much appreciated. I know we get good feedback on this segment, so thank you on that front, and you have a great rest of the day, Brandon.
Thanks, Gavin. Take care.
All right, we'll talk to you soon. All right, we're just going to shut down audio real quick, and this was taped. So I'm going to get that up on the site as soon as possible, and we will restart audio shortly.